How often do you feel as though your portfolio is riding a roller coaster? A moment ago, the stock market was flying, and the next moment, it was falling. It is sufficient to provoke an ulcer in any person. On the other hand, what if there was a method to invest in something that was a little bit more reliable, something that offers a consistent flow of income regardless of the external conditions? Bonds are the dependable heroes of the world of investment, but they are frequently dismissed as unimportant. We're diving deep into the world of bonds, specifically how to buy them on Robinhood. Now, before we jump in, it's important to understand that Robinhood doesn't actually allow you to buy individual bonds. But fear not, there are still ways to get your bond fix with this popular investing app. What are bonds anyway? Let's take a quick detour for the investing newbies. Bonds are essentially IOUs from governments or corporations. You loan them money, and in return, they promise to pay you back with interest over a set period. Think of it like lending your friend some cash, but with a legal contract and hopefully a better interest rate. There are two main types of bonds. Government bonds, issued by Uncle Sam himself, or the equivalent in your country, and corporate bonds, issued by companies looking to raise capital. Government bonds are generally considered safer, but they also tend to offer lower interest rates. Corporate bonds can be riskier, but the potential payoff can be higher too. Why consider bonds? So, why would you even bother with bonds when you could be chasing the next hot stock? Here are a few reasons. Stability. Bonds are known for their stability. Unlike stocks that can fluctuate wildly, bonds offer a more predictable return. Income. Bonds pay regular interest, providing a steady stream of income for your portfolio. This can be especially helpful for retirees or those seeking a more conservative investment strategy. Diversification. Adding bonds to your portfolio can help diversify your holdings and reduce overall risk. Remember, not all your eggs should be in one basket. All right, enough talk. Let's bond with Robinhood. Since Robinhood doesn't offer individual bonds, how can you still get involved? Two words: bond ETFs. Exchange-traded funds, or ETFs for short, are basically baskets of securities that trade like stocks. There are ETFs that specifically focus on bonds, allowing you to invest in a variety of bonds in a single purchase. Here's how to find bond ETFs on Robinhood. Open the Robinhood app and tap the search bar. Type in bond ETF or the ticker symbol of a specific bond ETF you're interested in. Once you find an ETF you like, tap on it to see more information like its holdings, expense ratio, and historical performance. Choosing the right bond ETF. There are many different bond ETFs available, each with its own focus and risk profile. Here are some factors to consider when choosing a bond ETF. Maturity. This refers to the amount of time until the bond ETF matures and you get your money back. Longer maturity bonds generally offer higher interest rates but also come with greater interest rate risk. Credit quality. This refers to the creditworthiness of the issuers of the bonds held by the ETF. Government bonds are typically considered the safest, while corporate bonds can be riskier. Expense ratio. This is the annual fee charged by the ETF to cover its operating expenses. Lower expense ratios are generally better. Beyond the basics, bond options on Robinhood. While Robinhood doesn't allow you to buy individual bonds, it does offer options trading for some bond ETFs. Options contracts give you the right, but not the obligation, to buy or sell an underlying security at a specific price by a certain date. This can be a more advanced strategy, so be sure to educate yourself thoroughly before diving into options trading. Remember, it's your money. Before you jump in and buy any bond ETF, remember to do your own research and understand your risk tolerance. Bonds are generally considered a safer investment than stocks, but there's still risk involved. The takeaway: bonds can be a valuable addition to your portfolio, offering stability, income, and diversification. While Robinhood doesn't allow individual bond purchases, bond ETFs provide a convenient way to gain exposure to the bond market. Just remember to choose the right ETF for your investment goals and risk tolerance. With that said, thanks for watching, and until next time.